I hope your summer's been great. The last time I believe you were at this table with me here in Washington, we were joined by the two gentlemen who helped to negotiate the USMCA. And now that we have seen this relationship devolve to the point of dollar-for-dollar counter tariffs with Canada, I'm wondering if you see the opportunity for a deal here or an intractable situation with Canada.
Yeah, so look, there's no question. What occurred was a serious bump in the road, no doubt about that. But it's not necessarily a fatal one, in the sense that in the negotiations that had been occurring in the weeks before, there was certainly a seriousness of purpose demonstrated by both countries. They were tackling issues that matter, some of them long-standing trade irritants, some of them new issues that the U.S. has raised in this joint review of the U.S.-Mexico-Canada agreement. There was real concrete solutions moving forward, and the hope here was that this would, if not entirely clear the decks, really lay the foundation for an announcement on country-to-country discussions, negotiations between the U.S. and Canada that would lead ultimately to a bilateral agreement, and then have the three countries, including Mexico, sit down and work through some of the president's priorities on China, economic security, and supply chains. So one thing, Joe, I've learned in trade is it's a deal is never done till it's done. No matter how close and how certain it appeared to be, it didn't. But that doesn't necessarily mean that this has to devolve further. In fact, I think as we watch the elections in Canada here, about 6 weeks away, the midterms here in the United States, I think there will be an opportunity to come back because again, they had bridged the gap in pretty significant ways on some real substantive issues.
Well, yeah. So if you go back and read coverage from Thursday, Friday, even early Saturday, there was an expectation that a deal would be struck. Things fell apart, we understand, at the last minute. But these new tariffs don't take effect yet. Canada's take effect, I believe, the 8th of September. Ours would be by January 1st, 2027. Is this just some sort of high-stakes negotiation that's playing out in public?
Look, one thing we know about trade, it is the marriage of politics and economics. And all of trade is local. And so, look, it is not surprising for a country to view what the impact of a trade agreement is going to be back home and make decisions based on that. Every country does this. In this case, I think ultimately the goal should be to get to the negotiating rounds for the U.S.-Mexico-Canada agreement, because that agreement has become so vital to all three countries' economies, including the U.S. We visited before about this, but because of the trade agreement the president negotiated 6 years ago, Canada and Mexico today are now America's largest customers by far, our biggest investors in the United States, mainly in manufacturing, and our most important supplier. So this is a partnership unique in the world. It is the most consequential trade agreement in the world. It is worth millions of jobs back home here in the United States. And so I think you look across these three countries, our manufacturers, farmers, small business people want to see this review come to a conclusion in a positive way. And everyone hoped that the agreement they were discussing would jumpstart those discussions.
Yes, right. Well, I mean, look, as someone who was a key negotiator in the original USMCA, did you see this coming when the president chose to not reauthorize?
You know, not surprised, because he'd been signaling it for quite a while. One, his agreement is working. It is the gold standard of free trade agreements in the world, no question about it. But over those 6 years, you know, some of the issues were not enforced as the U.S. had hoped. There have been new issues evolving, including China's super aggressiveness, transshipment of goods, moving them through Mexico unfairly, issues like that needed to be raised. And so I think what was important, the president didn't withdraw. He simply said, unlike Canada and Mexico, I'm not going to renew it in its current form, and set up the negotiations with Mexico. So clearly there is a path here. Ambassador Greer has adopted sort of the same formula, the same model that's been used in these reciprocal trade agreements. It's a model the president's familiar with, because at the end of the day, I think Ambassador Greer hopes to take an agreement to the president by the end of the year, get that sign off, negotiate the final details of it. I think the biggest impact of this may be a delay in that timetable.
Interesting. Yeah, you do wonder what Mexico thinks of this particular stop on the road here and how it might impact our longer-term negotiations. But all this is happening, Mr. Chairman, while lawmakers are out of town. We're in August recess right now, and they're going to be piling back next week with a lot to manage here, including trade, foreign policy with regard to Canada, with regard to Iran, of course. And then there's going to be the matter of budgeting for the new fiscal year, and we've got a continuing resolution that you can weigh in on if you want. But one thing that the White House appears to be seeking is some changes to capital gains. And I'm wondering your thoughts on this. As the former chairman of the Ways and Means Committee, you've had this argument before about indexing capital gains, as the president has reportedly suggested he would like to see. Is there an appetite for that in this Congress?
You know, I would hope so. Obviously, this is a very pro-growth issue, and we had wanted to lower the capital gains rate in TCJA. At the end of the day, sort of ran out of the money to do it, but there's no question about it. If you index it, you quit taxing people on inflation for their assets, which I think is a good principle, period. Secondly, it unlocks these assets, whether they're physical ones, stocks, other type of investments. That's good for the economy as well, creates new opportunities. You know, there is a cost to it always on these issues. You've got to weigh the pro-growth outcome against what that tax cut cost. But at the end of the day, America, one of the reasons we have such a resilient economy and the largest in the world, we have an investment infrastructure in the tax code. It encourages investment by a lot of Americans, a lot of businesses in a way that grows the economy. Capital gains is a big part of that. Those investment incentives that works.
Mm-hmm. Well, you know, the bond market's been getting agitative, Mr. Chairman. Maybe you have too. We're looking at a long bond has been above 5.2% here. The 10-year, we're told, is going to be at 5% at some point. It's just a question of when. And it all came after this realization that our federal debt was at $40 trillion. It looks like a typo even days after it was first published. As we try to get our heads around a number like that, is this the right time to be potentially lowering our capital gains revenue?
You know, actually, I think last time we lowered the rate, the revenue from capital gains actually grew. Sort of like as we did in 2017 when we lowered the corporate tax rate, tax revenue from those corporations grew. Economic growth really is a budget tool for you as long as you restrain spending. That's where we're failing in a big way. We've got record revenues coming in, but our spending's outpacing it. And the stunning number, I agree with you, 40 trillion just is a kick to the gut, I think. Secondly, it's not going to take care of itself. Congress is going to have to act to move forward, especially as we look at Social Security, Medicare, Medicaid, others moving toward serious insolvency issues here. So you've got to have that restraint. I did appreciate Republicans, I think, came up with $1.5 trillion in their recent permanence of the Tax Cuts and Jobs Act. A good start. They'd like to go farther. But at the end of the day, America really needs to tie our spending to the size of our economy and right size it over time to where we're not a financial risk going forward.
Well, of course, you've seen the Treasury Secretary get involved in the bond market, which has been somewhat controversial, and it hasn't made a big difference yet, realizing that he could still do a lot more buying here. We heard from Stanley Druckenmiller. Did you see this op-ed this morning, Mr. Chairman? Governments defending prices against fundamentals always lose, he says. That's Besant's own mentor, Druckenmiller. The only variable, he writes, is how much they spend before conceding. Is this the right move right now?
You know, I think getting fiscal policy right is the only solution here. It's not going to come from the Fed. It will not come from Treasury or any administration, frankly. It's going to have to come from Congress. Setting guardrails around spending, putting in place enforceable spending caps. You know, and over time, you're not going to fix this problem immediately, but over time, right-sizing that government in a way that markets, more importantly, the country feels more secure. Joe, I have to tell you, my first 4 years in Congress, we balanced the budget every year. And I just assumed it would always be that way. But we've never seen a balanced budget since those days. So this is long overdue. I do think there are a lot of members in Congress, certainly among my Republican colleagues, who this is what they wake up to. This is what scares them the most, this debt and deficit. So don't think all of Congress is ignoring this. I think there is a pretty strong crew of members who know we've really got to face this down.
Boy. Until then, it's a continuing resolution, right? Nobody's crafting a budget between now and November.
Yeah, our budget process is broken, Joe. Has been for a long time. I would love to see budget reforms. I've seen them through the years get floated. They're really smart. They're really good. They should be bipartisan. But look, if the way our laws work, if we were a manufacturing plant, Congress would manufacture spending. That's how our budget's set up. If we want to manufacture reductions in efficiency, we got to retool the plant. That means rewriting how we do our whole budget. And I think that too is being considered by members of Congress who want to take a serious substantive look, like Jody Arrington, chairman of the Budget Committee, would be one. But there are others who are eager to join them.
Really interesting. You're paying $3.62 for a gallon of gas in Texas, which is quite a bit below the national average right now. In our remaining moment, Mr. Chairman, to what extent will affordability play into the election, the Senate election in the state of Texas?
You know, I think it already is. Look, affordability is a big reason President Trump won the presidency for his second term. Certainly a big reason Republicans maintain the majority as well. Certainly we as Republicans and they as a party will need to make that case very strongly in Texas and across the country.